Hello, everyone. Welcome to another episode of Phillip Trading Podcast. My name is Liao, and today we are very happy to have Mr. Daniel Ang with us. How are you doing, Mr. Ang?
Hi, good afternoon, Liao, and I'm fine. Thank you very much considering.
Okay, good to hear that. Yeah, so Mr. Ang started his career trading commodity futures back in 1985. He went on to be a gold dealer in 1989 before joining Standard Chartered in 1992, where he traded mostly US futures and also Forex and became one of their vice presidents. He is currently contracted to the CME Group as an independent speaker for the Asia Pacific region, as well as for the Frankfurt-based Eurex. He is also the author of The Accidental Trader, and you can find his book available at major bookstores in both Singapore and Malaysia. So today he will be giving us a quick review on his upcoming webinar with Phillip Futures on the 9th of December, which is on this coming Thursday. So please do not miss this insightful webinar with us, where Mr. Ang will be sharing his view on the rising inflation, central bank's policy, and its implication on Eurex micro equity futures contracts. So for those who are interested in trading in the European market, you may find the registration link from our official website, or you can also leave a comment to us and our representatives will be more than happy to help you to register for this upcoming webinar. So now, without further ado, I will pass on to Mr. Ang to talk about his upcoming webinar.
Hi, good afternoon to all of you. And I'm sure the world has always been focusing on the United States financial markets to get a sense of where the global economy is heading. That is still true because the US economy is still by far the largest economy in the world. Okay. However, we do not want to overlook what's happening in the the second largest economic bloc. Okay, I'm not talking about country, I'm talking about bloc. Okay, in the world, which is the Eurozone. Eurozone, of course, refers to the confederation of states that join together for a common currency under the euro. Okay, currently there are about 19 countries left that are still using the euro. So as a economic bloc, they are by far the second largest. And of course, what happens in Eurozone will have global implications. Today, I'm going to spend some time to talk about the 5 major concerns that I have as I looked into Europe itself. Of course, the major theme for this year since March has always been inflation. So inflation in the Eurozone is also out of control. As we are talking right now, the Eurozone as a whole is experiencing the highest possible inflation since the euro came into being, which is 1987. Okay. Now, if you look at Germany, now Germany is also the major economic engine within the Eurozone because it is the largest economy. Their inflation is running at a 29th high. So this is a bit scary because we are looking at inflation at levels we have not seen since the Second World War. So this will have major implication going forward. So what are the major trading blocks doing? Okay, in terms of United States, in terms of Euro, in terms of Europe, in terms of Japan, in terms of China, for example. Okay, they are all concerned about inflation because this is global. Okay. Now, as far as the United States is concerned, the US Federal Reserve, which is the central bank, has already started slowing down the quantitative easing, which is their asset purchases from $120 billion, okay, started in November. Okay, they started to slow down the purchase of these assets, okay, and it will continue all the way to perhaps until the middle of 2022. Okay. At the same time, once that is done, they have already telepathed to the world that they are also looking to raise interest rates to tackle the stubborn inflation we are seeing. Okay, whether that will come into being or not, we do not know, but that is what the Federal Reserve has been telling the whole world. So that means the US is looking to take proactive action to tackle inflation. However, in the Europe itself, in terms of the ECB, which is the European Central Banks, they have taken a slightly different approach. They do not believe that inflation is going to be permanent. They still believe that inflation is going to be temporary, and they are not looking to slow down their asset purchases. They may end one of their program, but the other program that has been running since 2014, that will be kept alive. Okay, and they are currently not looking to raise interest rates. Now that cause a policy divergence, which we all have to worry, because essentially what will happen is that financial institutions in Eurozone, okay, will start to look at US. If the ECB policy is to maintain interest rate at the current level, okay, and also not looking to slow down the QE program, then there is a very real risk. In fact, we are already seeing a global capital move, okay, from Europe to the United States. That's the reason why over the last few weeks, you can see that US dollars has been rising, okay, and the euro has been falling, because this is what the smart money is doing. They are shifting their capital from Europe to US, because US has a likelihood of raising interest rate, meaning to say that money needs to have a yield. So if the money is stuck in Europe earning zero interest rates, or even worse, negative interest rates, then anywhere with higher interest rates on a relative basis will become very attractive. And currently, that is the United States. So for the next few months, we will probably be seeing this shift in global capital accelerating towards the United States, okay? So that will be one of the impact of a policy divergence. Now, the other thing that was also of concern is that not only are we dealing with surging inflation, okay, the economic growth has begun to slow down from the numbers that we see in Q3. Of course, Q4 is not over yet. We need to finish this year. And then possibly by the first quarter of 2022, then we will know what is the Q4 number for 2021. So the latest number we have is Q3 of 2021, and the number does not look good, okay? Because not only in the US, in Eurozone, the GDP has already fallen off from the numbers in Q2, okay? So that is a concern, because in combination of stubborn inflation and slower economic growth, there is a real possibility of a stagflation. A stagflation means economic growth has slowed down. On the other hand, we have rising inflation. So that will be a bad combination. No matter how you slice it, inflation is not, it's worrisome, but it's not as worrisome as a stagflation. Because once an economy goes into a stagflation, it is very difficult to get out of it. One good example is to look at Japan. Japan has stagflation since the 1990s, and today is 2021. They are still stuck in that doldrum, okay? That means to say that the economic growth in terms of GDP is anemic, okay? There's hardly any growth in Japan for the last 3 decades, okay? So that is very, very scary, okay? That will have social implications. And of course, to investors like you and me, we will want to know what are the economic implications. So this is the one. Now, another thing that we also want to know, which is peculiar to the Eurozone, is there's a change of leadership in Germany. Earlier on, I did mention that Germany is the largest economic entity in Eurozone. And of course, a change in leadership. After somebody who has been at the helm for 16 years, Angela Merkel is stepping down. Okay, the new government is going to be led by a 3-party coalition led by the Social Democrats. Okay, and this is a little bit, this party is a little bit on the left side, meaning to say that they are more socialist. Now, we do not know what will be the policy and the policy impact of this new government. But every time we have a change of government in the middle of a major crisis, we have economic crisis, we have slowing down economy, we have a resurgence of the COVID-19. And of course, on top of that, we already know that Europe is again reimposing restriction on travel and on individual movements. So once they go into full lockdown again, then obviously we know what are the negative impact of a lockdown in the economy. Nothing moves, okay? And the economic front will definitely be negatively impacted. So going forward is all bad news. Now, on top of all this bad news, there is this current thing that's going on in between Russia and Ukraine. Now, Russia and Ukraine has been on and off having this issue about ethnic tension since the disintegration of the Soviet Union. Half of the population in Ukraine speaks Russian, and they identify themselves first as Russian before they consider themselves Ukrainian. So that is a major problem. Remember back about 3 years ago, Russia actually annexed Crimea. Okay, Crimea has always been a major concern because they all wanted to lean towards the Russia, which eventually Russia came in to annex them. So the half of the current population in Ukraine speaks Russian. Okay, so that is an issue because the NATO, Ukraine is trying to join NATO. Okay, which Russia sees as something that they do not want to see, because that will mean that they will have US forces at their border. Okay, so during the days when they have a Soviet Union, why they have all these satellite states on the west side of Russia is because they want all these states to act as buffer. Okay, so now after the disintegration of Soviet Union, all these countries that used to be part of the Union has now started to join membership into the Eurozone for some, and into NATO for the rest. So Russia see this Ukraine desire to join NATO as a reason for them to actually wants to move in to take over a good chunk of their territory. Okay, they need to build in the buffer. Okay, so if this thing comes to blow, which I think the risk is very, very high, as we slide into this crisis, there's a very good and real chance that this thing will blow up into a real open war between Russia and Ukraine. And if that happens, it's inevitable that NATO, and of course, by extension, the Eurozone and the US will get entangled into this mess. Now, there's already a lot of issues going on in the world in terms of the economy, in terms of the virus. And on top of that, you have a change of leadership in Germany. People are still trying to figure out how the new government is going to do about the economy, what are their views. And then on top of that, you have this risk of a war at their border. Okay, so all in all, we are looking at a very, very serious situation in Europe. Okay, that will definitely impact the economy. Okay, so during my next Thursday's webinar, I will be spending more time to talk about the individual issues that I just brought up. Okay, as far as the inflation is concerned, as far as the GDP is concerned, as far as the what is the thinking behind the ECB, okay? What is the president of the ECB is thinking, and that will bring us to how are we going to be able to take advantage of all these, potential flashpoints, and how to use the Eurex micro equity index to take advantage of all this potential move in financial markets. Now, remember, I started my podcast saying that Eurozone as a whole is the second largest economic bloc. So while we are looking to US for direction, we also must not forget there is another equally heavyweight, okay, in Europe itself. And if things do blow up sky high in Eurozone, it's inevitable that we living in Asia will definitely be impacted. So we want to be able to take advantage of all these potential moves. And the Eurex micro equity index is one of the most useful. In fact, I think that is the most relevant products that you want to take to actually be aware of, knowing that the crisis may come from Europe this time. Okay, so during next Thursday's webinar, we will spend some time to talk about the characteristics of the Eurex micro equity index futures, in particularly the Euro Stoxx 50 as well as the DAX 30. Okay, so these two major index has fantastic liquidity, and it is very, very tailored towards the retail investor like you and me. All right, Liao, back to you.
Okay, wow. Thank you very much, Mr. Ang, for the fantastic preview. Now, once again, for our audience out there, if you haven't registered for this upcoming webinar, you can find the registration link in our official website, or you can also drop us a message and our representative will be more than happy to assist you. And if you are interested in Daniel Ang's previous webinar, where he talked on tapering and the impacts on US equity markets, feel free to look up on our YouTube channel. Last but not least, you can also follow us on social media, Facebook and Instagram for any new updates from us. Now we have come to the end of our podcast. Once again, thank you, Mr. Ang, for being here today. I will see you soon.
Right, I'll see you guys soon on Thursday next week.
Thank
Bye.
you. Goodbye.